The Monetary Policy Committee meeting was held recently in Abuja with 9 members out of the 11 members of the committee present.
Output growth across major advanced economies remains subdued, confronted by legacy headwinds, including the subsisting trade war between US and China, regional hostilities in the Middle East, rising debt levels, growing uncertainties around the Brexit, and increasing political tensions between the US and Iran, including fragilities in the financial markets, all contributed in dampening the growth prospects. In the emerging markets and developing economies, output growth remains broadly mixed, with some economies performing stronger than the others. Consequently, the International Monetary Fund, the IMF, revised its projected global growth forecast to 3.2% in 2019 from 3.6%. Price developments continued to soften across major advanced and emerging market and developing economies as aggregate demand continually weakened, resulting in softening monetary policy by major central banks to address downward trending prices and to strengthen aggregate demand. Data from the National Bureau of Statistics shows that real gross domestic product grew by 1.94% during the second quarter of 2019, compared with 2.1% and 1.50% during the preceding and corresponding quarters, respectively. This mediocre growth, we believe, is consistent with global trends of dampening output growth and was driven mainly by the oil sector, which grew by 5.15%, while the non-oil sector grew by 1.64%. At 57.7 and 58 index points, the manufacturing and non-manufacturing purchasing managers indices grew moderately for the 30th and the 29th consecutive months, respectively, in September 2019.
The CBN Governor and chairman of the committee, while fielding questions from journalists at the Apex Bank's headquarters in Abuja, explained the need why Nigeria must increase VAT.
The government has a responsibility to fend for everybody. In fending for everybody means that it has to spend money to provide infrastructure, roads, airports, railways, and do different things that will improve the lives of our people. But there are two ways through which government can fund this expenditure. It's either it raises revenue or it goes for debt. You all know that the government has been criticized that the debt stock is too high. You all know that government has been criticized that its debt to revenue, debt service ratios are too high. When you say the debt service ratio is too high, it means that your interest rate to your revenue, your interest rate is too high relative to your revenue. And what that also means is that your revenue is small, because if your revenue is large, then your debt service ratios will be lower. Now, so government unfortunately will not have any option. If we say government should not borrow, then government must raise revenue. If government must raise revenue, and we think that this should be one way through which government can raise revenue to meet its obligation, then I think it calls to a rationale that what we're saying is that it is the right decision to say that government has to increase VAT from 5% to 7.5%.
Mr. Godwin Emefiele, the governor of Central Bank of Nigeria, CBN, says the plan to increase value-added tax, VAT, from 5% to 7.5% is in the right direction to raise the country's revenue.
Sometimes, yes, we agree that this may be painful, but it is important that we understand that government also has an obligation that it must meet, and so it must raise revenue. And what even is this VAT rate? 7.5%. Compare the VAT rate in Nigeria to VAT rate in any part of the world. Nigeria's VAT rate, even at 7.5%, stands at one of, if not the lowest in the world.
He further explained that the government has the responsibility of providing basic amenities for the masses. Therefore, the government had only two ways to fund its projects, which are by revenue or through loan collection. According to him, the present government has been criticized by some people for high rates of debt incurred on the issue of cashless policy. The governor sympathized with the banking public, while he emphasized that the cashless policy is not new and has to be upheld to meet global standards.
I seriously and truly sympathize with the banking public and regret the inconvenience that this may cause, or certainly is causing, bank customers. But let me put it this way. The cashless policy in Nigeria is not new. It was first launched in 2012, and several engagements were held across multiple stakeholders before we started this policy in 2012. Indeed, it was by my predecessor. I didn't start it. At inception, charges had always been on deposits and withdrawals. And this started since 2012. Withdrawal charges have been in place. Only deposit charges are new today, and I will explain. I said at inception, when it was contemplated, if you deposit money in a bank above a particular threshold, in which case for individuals 500,000, for corporate 3 million, you are charged. For withdrawals, if you also withdraw above a particular threshold, you are charged. Since inception in 2012. But it got to 2014, after receiving some engagements from different stakeholders, we agreed that it was too early to begin to charge people who want to deposit money in the banking system, because we agreed at that time there was a lot of cash outside the banking industry, and that there's a need, that there's no need to penalize people who would like to bring their cash from outside the banking industry into the banking industry, that we should relax the essence of charging people for depositing money in the bank, but retain those who want to withdraw cash from the bank.
He appealed to Nigerians to show understanding and support government's policies.
I think I would just have to appeal to Nigerians to please try to show understanding. It may seem painful, but again, it's important for us to know that when government spends, because you are looking at the adverse consequences it has on the purchasing power of the person who will spend. But you should also look at the positive implication on the fact that government raises revenue, debt service ratio is lower, government can meet its obligation to improve roads. When government improves roads or provides money for electricity, it will also have positive implication on the GDP and output growth of the country. So which will be better then? I would rather choose, just like NPC decided, that VAT will be a better option to raise revenue.
This marks the 5th Monetary Policy Committee meeting for the year 2019.